I am currently the founder of MEM Investment Research, and I'm happy that you could join me today. Today we're going to be talking about how you can spot and then trade trending stocks. And as we go through, you're going to see just how critical this skill is and how important it's going to be to your successfully being able to trade the markets. So again, I'm really delighted that you could join me today. I'm going to start by providing a little bit of background as to who I am. I do have over 25 years of experience, and this is primarily Wall Street related. I, as mentioned, did start out at Goldman Sachs on their fixed income trading floor. From there, I did go on to become a portfolio manager of over $2 billion in fixed income, again in New York City for a major asset management firm. And upon completion, or when I left there, I moved to the West Coast with my then new husband, and I was able to join a firm that is very, very expert with equities and stocks, and some of you may know William O'Neill and Company. They are the founder of Investors Business Daily, and I was with the institutional marketing firm side, and with that I was able to work with top hedge fund and portfolio managers around the world. That was for 15 years, a vice president there, and throughout that time constantly studying the markets, studying charts, seeing what works. And for those of you that are familiar with O'Neill's work, a lot of that is centered around trying to identify, uncover these big winning stocks. And that was a big part of my work. It is still a part of my work. I currently am the author of a top performing weekly, actually it's a bi-weekly newsletter. And I do still work with institutional clients. I have just over the last year broadened out to work with self-directed investors. So I'm really excited to bring my many years of experience to, again, self-directed investors, help them become better traders and more successful with their investing. So very briefly, this is a disclaimer. We're not going to read the entire thing, but basically it's important that you know that the presentation is going to have historical references, and some of them actually are going to be current as well, but it is primarily and only for educational purposes. So we're not going to be providing any recommendations, any buy and sell recommendations today. So let's go ahead. I'd like to start with what we will be covering today. We'll be covering quite a bit. I hope you have notepads, you can take notes, but all of this will, of course, will be sent to you at a later date as well. But today we're going to be looking at defining what exactly a trending stock is, and then also how you as an investor, how can you catch that trend early? There are ways, and we will review those ways. Equally as important is how can you pinpoint when that trend is over? Now this can be either an uptrend that is reversing down, or equally important, a downtrend that is reversing up. So we're going to really dig into how you can pinpoint that type of activity, and then also using history as a guide. That's where we're going to be providing a lot of examples to really help you get into your mind how to spot these up and down trends as they occur. And then lastly, at the end, there will be a special offer at the end of this presentation, and I urge you to stick around for that. So let's go ahead and start at what I call the very beginning. And the first is, what exactly are trending stocks? Well, before we get into that, I did want to mention that the markets over the years, they do trend, and this is a very, very important tenet to technical analysis. So it's built around the premise that all stocks trend, and having that knowledge, you can then, with the proper tools, fine tune and spot and then trade these trends. So basically a trending stock is one where a stock has entered into a particular direction. Again, that can be up, down, there are even sideways uptrending stock. So basically it's exhibiting signs of continuing to head in a certain direction. So rather than as an investor, rather than you getting whipped around, you can really use these solid trends that are going to improve your odds. So my way of investing and the way that my clients work is not usually going to be intraday, although what I'll be speaking to today can be used for intraday. This is more for a little bit longer term. You want to be able to stay in a trade, not get whipped around. The average length of an uptrend for these big winning stocks is about 18 months. Now, not every stock is going to go on for that length of time, but of course that can provide you with over 1,000% return or 100%. So we do tend to be a little bit longer term, not always 18 months, but certainly 1 month on. And so let's go ahead and review some of these tools that I mentioned to you can be very helpful. So over time, again, I've reviewed thousands of charts and I continue to do so each week. And over that time, I've found 3 particular indicators that are very powerful in helping you with this trend spotting. And I've chosen them for 2 reasons. One, they are very effective, but secondly, these indicators are very easily accessible to investors. Most of your trading platforms will have these indicators. And the first one, and we will get into this and review it further, but just for definitional purposes, the first one is called a relative strength indicator, or RSI. And the second is moving averages. I use simple moving average. And then lastly, moving average convergence divergence. So these are the 3, again, that I've found to be the most powerful for trending and spotting, pinpointing buy and sell points. But more importantly, they're easy for you to access and for you to screen upon once we go ahead and define how these can be used, these indicators. And then lastly, what characteristic works with these trend indicators I just mentioned. There's one key characteristic that can be really quite powerful, and that is volume. So if these indicators are providing you with either a buy or a sell signal, if it is coupled with volume, those signals are going to be indeed even more powerful when you spot them. So we're going to jump right in and take a look at this very first example. And this is a way for me to help you determine and see exactly what these indicators are that I was mentioning to you. What we're looking at here is Freeport McMoran. It's FCX is the ticker. So we're looking at a daily price chart. Each one of these bars is 1 day of trading activity. So I've overlaid those 3 indicators on this chart. Now, the only one that goes directly on top of it is going to be your simple moving average lines, and we can begin with that. For daily charts, your most effective simple moving average lines tend to be your 10 and your 50 days. So in this case, the green is your 10 and the 50 is your longer term, it's red. And basically it's taking the price over that either 10 or 50 day time period and averaging it, smoothing it out, and providing you with this line. There's quite a bit of power in these simple moving averages. 2 things you want to pay attention to with them, and that is you want to pay attention to the slope. Is it downward trending, or are these moving averages in an uptrend? Very powerful. If your key moving averages, particularly your longer term, in this case your 50-day, is in a downtrend, generally you are advised to stay away from the stock. That's a very heavy pattern. You can see here where FCX attempted to reverse, but it's just not going to do it. A secondary attempt here fails. Finally, when this key moving average, this is your 10, here's your 50, when it begins to trend upward, then your downward reversal has a much better chance of succeeding. So that is your moving averages. Let's move on to the RSI. That, as I mentioned, it's the relative strength indicator, and you want to pay attention with this smoothed out line. You want to pay attention to, again, not only the slope but the position. So if it is above this dashed line, this is your 50 net neutral line, that's viewed as the RSI being positive, meaning it's a positive signal. And likewise, if it trends negatively below this net neutral, that is negative, and you generally do not want to own it. And then your moving average convergence divergence has two lines. The red is what's called your signal line. It's a bit faster moving. And then the black is the actual MACD. So two things with your MACD. You want to pay attention to signal line crossovers, but also the position. So if it's above this, in this case, it's 0, that is viewed as positive. And when you can couple that with a crossover, then you have an indication that the stock is poised to go higher. Now, ideally from my work, you want to see at least 2 of these 3 signals trending positively, but most ideally all 3. And that's going to really put the odds in your favor. So let's take a look at this inflection point here. Your simple moving averages trend upward, your RSI is trending positively, as is your MACD, and you can see that indeed the stock does go on to greater heights. And we'll be seeing a lot of this in future examples that are even going to be more telling. So before we get into those examples, let's review what 4 key ways that you can use these trending indicators that we just reviewed. And the first is you can help you define a trend. And again, that's going to be whether either up or down. And then secondly, it's going to really help you pinpoint and identify your buy and sell using the signals that these indicators are providing you. And then also these indicators are going to make sure that your trend is holding. A lot of times you'll get into these upward trending, fast moving stocks, but just as important as it is to get in, you are going to want to know when that trend has ended. And then lastly, you can use these indicators to help you determine the broader market. How is the broader market in an uptrend or a downtrend? We will review an example of this because, of course, you don't want to put money to work if the broader markets are not healthy. So let's go ahead and resume looking at some examples. Here we're looking at a weekly chart of Priceline. And this actually is a fairly recent chart. But what I did want to point out to you is, and we'll see this as we review examples, oftentimes for trend spotting, whether it's uptrend or again a reversal, your weekly charts are going to be quite a bit more telling. And that is because your weekly price information is going to be smoothed out. It won't be quite as whippy. So what we're looking at here, again, it's a weekly, so each one of these bars is 1 week of price activity. So I mentioned here uptrend is interrupted and then it resumes. This is a phenomenon, if you will, that you will see again and again, where a stock, for instance, Priceline, was very much in a clear-cut uptrend, and then we had that decline that led into the beginning of 2016. The markets were down 16% peak to trough. Very, very tough market. There were only a handful of stocks that withstood that downtrend. So this, of course, got caught up. It went down, but indeed, once the markets stabilized, this stock was able to resume its uptrend. And I point that out because we will periodically go through market corrections and rarely, but sometimes bear markets, but those former leading stocks will tend to be the ones that can be the first out of the gate when the markets stabilize. So let's take a look at this Priceline and how we would be able to identify that it has resumed that former uptrend. Okay, so here we're looking at the simple moving averages. Because it's weekly, we're using a 10-week or 50-day, which is red. And then the 40-week is your 200-day, which is a very standard moving average on a weekly. So what we are looking for here is the price moves up above both that 200 and that 50-day moving average. And what in turn happens is it brings these moving averages into an uptrend. That's what you want to see. And then also we have the confirmation of the RSI turning positive. And then likewise, I talked about that positive crossover, the black line up through the red signal, but also more importantly, we are above that zero. So here we have three signals that are telling us that Priceline is indeed entering into an uptrend. And so what I wanted to point out here also, when using a weekly chart, you will get downdrafts similar to this period here at the end of August. But for those of you that are longer term, you can use the 200-day as your moving average, because the RSI is still in positive territory. MACD is heading south, but still above zero. So longer term investors can stay with the stock. But let's take a look at the daily price chart. And this is, again, a current price chart. And you're looking at, you can see, hopefully visually, really just how much whippier this daily price chart is, because we're tracking the same, actually it's a shorter time period. We're not going back to 2016. This is only taking us back to the beginning of 2017. But again, very quickly, there is your weekly, and you can see the beginning of 2017 on, very clear-cut uptrend. But when we get to the daily, you're going to see quite a bit more in the way of bumps and ups and downs. So it's not a bad thing. You can still use these key indicators as a way to get you into the stock at the beginning of 2017. The uptrend continues. Ideally, you want to use your 50-day or longer term moving average as an indicator, but for those of you that, again, are more active traders, you may want to sell this type of break because your RSI looks to be trending downward. Your MACD has a negative signal. However, I would argue that it is still remaining in positive territory. You did have some head fakes here, if you will, but as an active investor, you would need to pay attention to these as a negative signal, and particularly this break in August would very clearly be defined as a signal to exit the stock. So more importantly, what I'm trying to point out here is your use of these indicators is really going to be determined by your style of investing. So either there's no right or wrong way. I will say institutional investors do tend to use weekly charts, but daily charts are equally effective. So let's take a look at another stock. This is a daily price chart of Mettler Toledo. It's MTD is this ticker symbol. And what I wanted to point out to you here, again, a daily chart, is very, very often stocks will enter into uptrends as they come out of bases. And this is a base is a price chart pattern. For those of you not familiar, I can briefly explain. A base is when a stock, there are several types of bases. What we're looking at here is called a flat base. The stock has entered into a trading zone, if you will, back and fill. It's in a channel. And at some point in time, the stock will either break up or down. In this case, it breaks up out of that price channel on big volume. We talked about volume being one of those key indicators, and sure enough, the stock enters into a very, very sound uptrend for some length of time. Now, oftentimes you will see a stock run out of steam. It's not going to go up endlessly. You'll see it break this 10-day. So during this period, as your RSI starts getting to that neutral period, area here, and your MACD is generally trending negative, this would be an ideal time for you to dig in do some work, see if there may be something shifting with this particular company, with the group that it's in. I do quite a bit of group work because sectors do come in and out of favor, but sure enough, this signal was a sign of worse news ahead, and it breaks down below not only that 10-day, but also that 50-day. Your RSI turns negative and your MACD, so that's a much clearer cut sign that the uptrend has indeed ended. So let's go ahead. What we're looking at here is a stock. This is Ellie Mae, ELLI. We're looking at a weekly. And I wanted to point out to you that volatile periods in the market will pull you in and out of trades. So I talked about stocks reversing an uptrend. So here's an example here. This is taking you actually as far back as 2015. This was a very, very big winning stock during that period. You can see it's in that upward channel, very nice clear-cut uptrend. But at some point, again, it's not going to go up forever. You will see a break down below. And indeed, we did get that break. It was on big volume. So the stock here, again, on a weekly, so each bar is representing a week. So it did have a significant downtrend. So how do we determine when that stock's downtrend has reversed? Well, again, you want the price to come up above those key moving averages. You want those key moving averages to begin an uptrend. This is your 50-day. And then also couple that with your RSI and your MACD signaling positively. So now we have reversed out of that downtrend. We go into a very nice uptrend, but again, what are the signals that the uptrend has reversed? And in this case, it breaks down through, again, not only that 50, but that 200-day moving average. Your MACD also has a negative crossover. So hopefully through these examples, you're able to really get a sense of the various ways that you can tune into whether your stock is trending or not. Here's another example. Hopefully you can see this. This is Intuitive Surgical. It's ISRG. And again, I talked to you about price patterns. And in this case, we're looking at yet another example. And I have a lot of this is on my website. I have other tutorials for you to dig further in. But this is what's called a saucer type base. And you can see that the stock, in this instance, we're looking at a daily chart. This is 4 months of trading activity. The stock breaks out of a 4-month base and enters into an uptrend. Now, how can we tell? Here are your key moving averages. In this downtrend period, your key moving averages are trending down. Your RSI is below 50 and your MACD is below 0. So this is your downtrending period. As it forms what we call the right side of the base, at some point there's an expectation that the stock will enter into a strong uptrend coming out of that base, and indeed it does. The stock breaks out on big volume. Our RSI turns positive, your MACD turns positive. So again, you are marrying this base pattern. In the other case, it was a flat. This is a saucer base with the other indicators flashing positively. And here is Intuitive Surgical, and we're looking at that same phenomenon, but we're getting a little more history here because this is what's called a weekly price chart. So each bar represents 1 week of trading activity. So 2016 was a good year for ISRG. You can see the stock in a very clear-cut uptrend. Your RSI is very positive, as is your MACD. But again, at some point, these stocks are not going to go up forever. They will break. In this case, the company came out and stated that they will be focusing their efforts in other areas, and Wall Street analysts got nervous, so the stock sold off. And while you, as an investor, normally do not enjoy these sell-offs, oftentimes they are an ideal time for the stock to set up for another uptrend. And in this case, indeed it did. This is again that saucer base. The stock breaks out of that saucer base on volume and goes on into another uptrend, and we're marrying that with the RSI and that MACD. And then here's an uptrend reversal. So just as important as it is to find and enter these uptrends, you want to make sure that you exit your stock in a timely manner so you don't lose money. So here we're looking at AT&T, and this is taking us back in time, 2016. This is from a year ago. So the stock here is very, very much in a clear-cut uptrend. It breaks out of this base. It does so on volume. We enter into an uptrend, but again, at some point, you will see a stalling action. Indeed, similar to the earlier stock where it has a back and fill, your RSI trends net down, your MACD trends down, and indeed, it's not always going to be, but in this case, it was a sign that the stock was doomed. And in this case, this break was because the AT&T had a threat of a strike of 2,000 of their internet workers, which was actually out there. Had you been looking at the news for this stock, you would have seen that there was potential for downside for that stock. And then here is a more recent chart. We're looking at ABBV, it's ABV. And what I wanted to point out to you is something I mentioned in the beginning. Your investment horizon, in other words, are you an investor as opposed to a very active, maybe a day trader, or even an active trader in general, you would use a different chart. So daily charts are fine for active traders. What I did want to point out to you with this particular stock is when you see the RSI trending negatively, as well as the price and your shorter term moving average and your MACD, it's looking a little dicey. When you're looking at a daily price chart, you want to use this 50-day moving average as your guide. That's your longer term moving average. It is trending upward, and you can still stay with that stock. So indeed, as long as your longer term MAV is trending upward, you're fine. The stock waffles a bit again, your longer term uptrend is still up. And it's not until this more recent period, this was following an earnings report, the stock did break below that 50, and that was a negative. And I'm pointing this out. This is a lot of the stocks we're reviewing are from our suggested holdings list from our weekly newsletter. And this one, I will say, we got shaken out of it because it did break that 50-day. However, the stock has more recently very much resumed that uptrend from before. This was, I would call it a shakeout. It's very, very much back into its uptrend. And we can also use this trending for looking at sectors. And in this case, we're looking at the technology sector. This is a weekly price chart. And what I wanted to point out to you here, this is a recent chart. So this particular time period is taking you back to pre and post election last year. And as many of you may recall, technology stocks sat out that big rally. There was concern over Trump's immigration stance that would impact many technology sector stocks. Get their revenues are from these international countries, so they were concerned that it would impact their revenues, so it sat out. But what we're looking at here is what's called a flat base. The stock is trending in a channel back and fill, but eventually it does break out to the upside. So you have a positive MACD crossover as well as positive RSI to confirm that technologies stocks were indeed back in favor for that period of time. And we do quite a bit of work as far as paying attention to sectors, are sectors in favor, and then more importantly, subgroupings within that. So technology, is it semiconductors and so forth. And then let's take a look at Max Linear. This is a stock that we were very successful with in that 2017 beginning period, but sure enough, and again, what we're looking at here is a daily price chart. Your trends are generally up. as far as your longer term 50-day moving average, your MACD is above 0. But let's take a look at when you can tell that the uptrend is broken. And quite simply, the stock price breaks below that 10-day as well as below that 50-day moving average. It does so on volume. Your RSI trends negatively, your MACD trends negatively. So now we know MXL is in for some tough times going forward. But what I wanted to point out to you is, of course, these downtrends, not for every stock, but for certainly most of them, at some point they will reverse back up. So here is, again, a current chart. We're looking at MXL. And I want to point out to you what we would need to see to convince us that this very, very severe downtrend has been reversed. Well, let's start by saying we certainly are seeing some very, very beginning baby steps toward that reversal. And here's why. This is a daily price chart. Your MACD had a positive signal crossover. It's still below 0. So what we would need to see from our work is not only the MACD get up above that net 0, we would also want to see the RSI get up above 50. But even more importantly, we're going to need to see a little more work with this shorter term moving average trending up, because right now your longer term is very, very much in a downtrend. That's heavy, heavy. See these periods here where it tried to break up. This is just a bit too heavy. So ideally, at some point, it may take another week or two, we can see this inch its way up a bit further, have these signals be more positive, and again, ideally, at least a flattening out of this 50-day. And that would tell us that the downtrend in MXL has been reversed. And then here's another uptrend reversal. Many of you know a lot of the retail stocks have gotten hit, and this is in hindsight what it looks like. So we're again looking at a very recent chart. In this case, Macy's was in a very clear-cut uptrend. This is in the beginning of 2015, but that uptrend, this is a weekly price chart. So these each week represents by these bars each week of activity. So the stock breaks below that 10-week or 50-day, then it breaks below that 200-day, and that is absolutely when you will want to exit. Your RSI is negative, your MACD trends negative. So this is what's called a death cross, when a shorter term moving average crosses below a longer term, and indeed we do get that death cross. So again, we had periods where the downtrend did attempt to reverse itself over here, but it did not, it was not confirmed. Your RSI was still in negative territory, as was your MACD. This looked to, a lot of times when you have these downtrend reversal attempts, if they are going to fail, they do fail very, very quickly. So you do want to be on alert for that, and that's still very much in a downtrend. So let's see where we are. Okay, and then this is Adobe. We're looking at a weekly chart, again, pulled from our weekly report. And what I'm pointing out to you here is a weekly chart and another example of the power of price chart patterns. This is a base, and the stock coming into an uptrend out of that base coupled with volume. So we indeed did have many signals telling us in the beginning of 2017 that Adobe could be bought, and that's still been a that's been a big winner for us, still in an uptrend. And then here we're looking at a daily price chart. And what I wanted to point out to you here, of course, is quite simply how much whippier it is. And as investors, I'm sure you feel that. But if you are using a daily chart and you do want to stay with the trend, you will want to use this 50-day longer term moving average as your guide. Now, this particular time, it broke below it, but it did close the day above the 50. You want to pay attention to the close. So you would have been able to stay with this particular stock. And then again, using longer term trends to keep you in the trade, another weekly price chart. This is Striker. So if it's repetitive, it's primarily to just really help you tune into, again, what you need to see, your RSI turning positive, stock price above those key simple moving averages. And then again, we're looking at a weekly price chart. So you want to use this longer term 200-day as your guide. And as long as that MACD remains above 0, your RSI is in positive territory, you are fine with this trade. And then quickly, this is energy, a very recent chart. What I wanted to point out to you is you want to use history as a way to help you define when the downtrend has reversed. So in this case, what we are looking at is XLE is the ticker symbol for the energy sector. And so what I'm pointing out to you here is there's been a lot of talk recently. Energy is trying to return to its glory, if you will, and reverse its downtrend, but you're not quite there yet. And what we would do is point you, and we have done this again with our clients, to when they were able to reverse that downtrend. We're taking you back to the beginning of 2016, and here's what you would need to see. You'd need to see on a weekly the price break above not only that shorter term, but also that longer term moving average. It does so while the RSI trends positively, as does the MACD. So here is your pivot point. This is a signal that this particular downtrend has reversed. If we take a look at where we are now, we just aren't quite there. Your MACD is just dead in the water down here. The RSI has hit this and bounced off, but more importantly, your simple moving averages are just very, very heavy. So use history, go back and look at what did it look like when they reversed prior. And this again is what you will want to see before it is safe to invest in these energy stocks. And I talked to you earlier about using these indicators to provide you with insight in the broader markets as far as whether they're healthy or not. And what we're looking at here is the S&P Large Cap Index. And again, we are using simple moving averages. Those are going to be your two, in this case, it's a weekly. So we're looking at a 10-week and a 10-week or a 50-day, and a 40-week or a 200-day. Those are your key indicators. And you can see that your 200-day is going to be the more critical. So oftentimes you will have these pullbacks and the markets will resume, as unlike these prior periods. This was a flash correction, and this of course was that bear market at the beginning of 2016. So once it breaks that 200, that is your signal that the broader markets are not an area that you would want to be in. So how can you screen for these trends? Again, you're going to look for that RSI to be above 40 is positive and below 60 is negative for screening purposes. And then also you're going to want to use the MACD, and you're going to want to, the MACD line either crosses above or below the signal line. These are all very easy things you can screen for. And then moving averages. I talked about a golden cross for uptrends, where the shorter term crosses above the longer term, and then death cross, where the shorter term crosses below the longer term. And then weekly metrics is going to be for longer term, and by that, weekly charts. So what are some conclusions? Well, technical analysis, it's built around identifying trends. So learning these indicators is really going to be important to you. You want to look at how your stock behaves historically when you're identifying those trends. We talked about that with energy. And then know yourself. If you're devoted, you can learn this, do the screening. If you have less time, you would be served to subscribe to a newsletter such as one that I put out each week. I mark up charts all the time, identifying why a stock is currently in a buy zone, and that's also a wonderful way for you to learn. And then let's go ahead. I talked about a special offer at the end, and what I am offering today is a video course. It's called 6 Characteristics of a Winning Stock. And I talked about how my work centers around looking and identifying these big winning stocks. And this particular course will provide you with not only insights on what those 5 key traits are of a winning stock, it also tells you where you can uncover those traits. It provides a lot in the way of historical examples as precedents. And then there's one key ingredient that every single winning stock needs before it takes off, and that's going to be discussed in there. So normally this is $297. Today it's only $29. You can access the link. I believe it's in the chat box. And then also wanted to point out to you that this work is built over my many, many years of studying charts, advising top portfolio managers, and there's a lot of wonderful information in this. Oh boy, I'm noticing that there are some questions. I'm not sure if I have time. I might have a minute or two. So someone was asking, it seems that you're taking the combination of moving average RSI MACD for this. Is this combination best for long term? This combination is best for any time period. If you're looking at daily, I do other tutorials with intraday. You can use it weekly, monthly charts. Really, that combo is going to serve you really quite well, regardless of the time frame of the price chart. Now, I'm reading other questions, but they may not be applied to me. So, so please send me the recording. Yes, you will be sent the recording. Great session. Can these signals be used for intraday trading? Yes, they can be. And I have other tutorials that review that. Unfortunately, I did not get into that with this. And I believe I may be out of time, but yeah, there is a promo code that you can use for this offer. It should be in the chat box. If not, for those of you, you can reach me at meminvestmentresearch.com and email me. I'd be happy to provide that to you. There is a link on this page, but again, I was told that it was going to be put into the chat box, so I apologize that it's not there. Let me see if, yeah, I don't have, let me see if I can do that, and then, there we go. So I was able to put it in there. I'm not quite sure if you're able to see this. So a lot of people are asking whether this will be sent to them and they can review it. Yes. Someone else talked about price action support and resistance, and that they like the 21-day moving average. And you're right, there are no rules with this. There are some stocks that respond better to the 21-day than to the 10-day for that shorter term. And then my email is maryellen@thememgroup.com. If you go to this website at the bottom, you will be able to access me directly from there, meminvestmentresearch.com. And then actually it looks as if they did put that link to today's offer in there. I would urge you to take advantage of this because it's normally quite a bit more for you to be able to get all of this information. And then with that, you'll also receive an offer to receive my weekly newsletter. It's normally $97 per month, but you can access it for $7 for that first month. And I believe I am out of time. Renee, I'm not sure if you're on deck there to pick things up, but I do want to thank everybody that stayed for this webinar, and I hope you found it quite useful. I look forward to hearing any kind of questions or any comments. Please go ahead and visit my website, and I'd be happy to respond.